Hey everyone, welcome back to Corporate Dakota. Today we're diving into a filing that is less about ongoing operations and more about a fresh start. A company that is basically saying hello world to the public markets and getting ready to build something big. We're looking at Evolution Global Acquisition Corp. And their IPO is packed with details about how they're kicking things off. This isn't your typical quarterly report showing profits and losses from selling widgets. Instead, this filing tells the story of a company created specifically to find and buy another business. Think of it as a bunch of investors pooling their money with a specific mission in mind. So what we have here is a Form 8K, which is basically a report for major events happening at a company. This specific 8K is all about Evolution Global Acquisition Corp's initial public offering, or IPO. This is when a private company decides to sell shares to the public for the very first time. They've just officially gone public, ringing the bell, so to speak. The official date of this report is the 12th of November, but the real action, the big event they are reporting on, happened a couple of days earlier on the 10th of November. That is when their registration statement became effective, and then on the 12th of November, they actually closed on the IPO itself. This is the very beginning of their journey as a publicly traded company. The company's name is Evolution Global Acquisition Corp. That Acquisition Corp part is a big clue. It means their main goal, their entire reason for existing right now, is to go out and acquire another business. They are essentially a blank check company, a special kind of company designed to raise money through an IPO and then use that money to find a target company and merge with it. Now, where are they incorporated? It says Cayman Islands. This is a common place for companies to set up their legal structure, often for tax and regulatory reasons. And here is their main office address. It is in Farmers Branch, Texas. This is their phone number. An important detail here is that they are identifying as an emerging growth company. This is a designation given to newer, smaller public companies that allows them to take advantage of certain regulatory flexibilities. Think of it as a way for smaller, newer companies to ease into the public spotlight without being immediately burdened by all the complex rules that larger, established companies have to follow. But they've elected not to use an extended transition period for new accounting standards, meaning they will adopt them as soon as they come out. So let's get into what actually happened. The biggest news is that on the 10th of November, the company's IPO registration statement was approved. This means the Securities and Exchange Commission, or the SEC, gave them the green light to start selling their shares to the public. Then, on the 12th of November, they actually completed this IPO. They sold a massive 24 million units, and get this, the underwriters, the folks who helped sell the shares, actually bought an extra 3 million units to cover any extra demand. That is a good sign usually. Each unit they sold consisted of two things. One Class A ordinary share, which is a basic piece of ownership in the company, and half of a redeemable warrant. Now, that warrant is interesting. A warrant is like an option. It gives the holder the right to buy a class of share at a set price, which is $11.5 here. This is a way for investors to potentially make more money if the company does well, and the share price goes up. They sold these units for $10 each. So you can do the math, 24 million units at $10 a unit means they brought in a whopping $240 million. That is a huge amount of money to start with. As part of this IPO process, they entered into several agreements. First up is the underwriting agreement with Cohen and Company Capital Markets, or CCM, who acted as the main underwriters. This is the contract that spells out how they'll sell the shares. Then there is the warrant agreement with Continental Stock Transfer and Trust Company, or CST, that will handle all the warrant stuff. They also have a registration rights agreement. This is typically for investors who bought shares before the IPO, ensuring they can eventually sell their shares to the public as well. There is a letter agreement involving the company itself, its officers and directors, and its sponsor, which is Evolution Sponsor Holdings LLC. The sponsor is usually the group that initially formed the SPAC and often puts in their own money. An investment management trust agreement. This is super important for SPACs. It means that the money raised from the IPO, that $240 million, is placed into a trust account managed by CSD. This money is essentially held in reserve and will only be used for the acquisition or if the company has to wind down. And then there are a few more private placement warrant purchase agreements. These are essentially deals where the sponsor or other related parties buy warrants directly from the company, usually at a deep discount. One of these private placement agreements is with the underwriters CCM, and another is with Clear Street LLC. Finally, there is an advisory agreement with Evolution Capital Pty Limited. This suggests they might be getting some expert guidance or strategic advice. Following right along, we see details about unregistered sales of equity securities. This section talks about private sales that don't need to be registered with the SEC, often because the buyers are sophisticated investors who are already aware of the risks. Right, as they closed the IPO, they sold exactly 6.8 million private placement warrants. These were sold for $1 each. So, the sponsor got 4.4 million of these private warrants, while CCM and Clear Street together bought another 2.4 million. This deal brought in an additional $6.8 million for the company. This is pretty typical for SPACs, as it gives the underwriters and sponsors some additional stake and incentive. Next up is a change to the company's foundational documents. On the 10th of November, in preparation for going public, the company adopted an amended and restated Memorandum and Articles of Association. Think of this as updating their basic rulebook, their constitution, to reflect their new status as a public company. It is a formal step to make sure their governance structures are in order. Now, this section, Other Events, is where they can report anything else significant that doesn't fit neatly into the other categories. This is a really key point for SPACs, that $240 million they raised from the public. It is not sitting in their main bank account ready to be spent on fancy offices. It is locked up in a trust account managed by CST. The money in that trust can only be used for one of three things. 1, when they successfully acquire another company. 2, if shareholders vote to change certain specific rights related to the combination period or other shareholder provisions. And 3, if they can't find a company to buy within a certain time frame, which here is 24 months, they have to give the money back to the shareholders. This trust structure is a major safeguard for public investors in SPACs. They also put out a press release on the 10th of November to announce that they had priced their IPO. This is just their official announcement to the world that everything has been set. And finally, this last section lists out all the supporting documents, the exhibits, that are being filed along with this report. This is where you can find the actual legal agreements and other paperwork related to the IPO. Here are the crucial exhibits. Exhibit 1.1 is the underwriting agreement. This is the contract with the investment banks that manage the IPO. Exhibit 3.1 is their updated governing document, their articles of association. Exhibit 4.1 is the warrant agreement, detailing the rules for those warrants we talked about. Exhibit 10.1 is the registration rights agreement. Exhibit 10.2 is the letter agreement. Exhibit 10.3 is the investment management trust agreement, which documents that $240 million trust. Exhibit 10.4 is the sponsor warrant purchase agreement. Exhibit 10.5 is the private placement deal with the underwriters. Exhibit 10.6 covers the private placement with Clear Street. And Exhibit 10.7 is the advisory agreement. Finally, Exhibit 99.1 is the press release they issued about the IPO pricing. And here at the end, we have the formal signing of the report. It is signed by Stephen Silver, who is the Chief Executive Officer, confirming that this report is accurate to the best of his knowledge. So, what is the story here? Evolution Global Acquisition Corp has successfully launched its IPO, raising a substantial $240 million. This money is primarily earmarked for finding and acquiring another company. The clock is ticking as they have a 24-month window to do so. Otherwise, the funds are returned to investors. The key players are in place, the agreements are signed, and the capital is secured in a trust. Now, the real work begins, finding that perfect acquisition target. It is a high-stakes game of strategic searching and deal. Making the company's future hinges on their ability to identify a solid business and negotiate a favorable merger. For investors, it is a bet on the management team's M&A skills and the potential for future growth through acquisition. It's an exciting, albeit risky, venture. What do you think of this SPAC's launch? Are you optimistic about their chances of finding a great acquisition? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into company filings. And don't forget to join our Discord community for more discussions and exclusive content. The link is in the description. Thanks for watching, and I'll see you in the next episode of Corporate Decoder.